Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are going to be discussing the short-term and macro price action, going over the recent explosive rally for Bitcoin, how this impacts the macro charts, and what to expect next on the immediate short term. Will this rally sustain into incoming CPI data, or are we going to see a correction back downwards? We are also going to be taking a look at the implications this move has had on the macro, the key levels we are watching, and what to expect next. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram via the first link in the description down below. You'll get access to updates, charts, analysis, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in the main VIP channel where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats from the general chat to the trading chart education chat to the daily video, the help, the news, and the trade setup chat. To get access to all of that, go to the free channel, click the pinned comments, contact our admin, click the links to find a 50+ month trading track record or a 10-minute video showing you inside the channel. We would love to see you in there. Let's jump on in. So taking a look at the recent 24 hours of price action, Bitcoin has seen a very explosive move toward the upside with this one singular 1 hour candle pushing from 77.6 to 82,000, nearly 6% in a single hour. And that was following a very recent announcement from President Donald Trump announcing that they are going to be bringing up tariffs to 125% and putting a 90-day pause on as well. Now, up to a few days ago, this was initially presumed to be fake news. In fact, we saw CNBC announce that they were placing a 90-day pause, and only a few hours later, Donald Trump announced that we were not looking to pause tariffs, and then 3 days later, they are pausing tariffs. So a whole bunch of, I'm not going to say the word on YouTube, but a bit of a mess around over here from what it seems to be Donald Trump really, throwing a bit of a spanner in the works over here, going out and saying that they're not going to do it, then they are going to do it, then he said that, they didn't even expect they were going to do it. It's all over the shop. So either way, we have seen the price rally. This, of course, is bullish for risk assets. And the big question is now, will this rally sustain? Are we going to sustain these prices? Are we going to continue higher? Or are we going to correct again back to these change of characters to pre-rally levels, moving into and potentially after CPI. So we've got a heap to talk about on the short term and the macro. Let's start on the market data though. 24-hour volume and liquidations. Volume up 52%, 400 billion. Liquidations up 91%, 587 million. Of the 587 million, 210 have come from longs, with the remaining coming from short positions. The DXY holding pretty steadily here, sitting just above that 200 moving average, with 1 day and 23 hours remaining on that week close at a 102.9 price point. Watching that weekly close carefully. The S&P 500 seeing probably one of the largest, if not the largest, single daily green candles we've probably seen for many years here on the S&P. Now, if we zoom into the daily chart, we can actually see this rally has taken us back to retest this prior break of structure, meaning we are now pushing into a point of resistance right over here. So the rally's moved up from support, now into a point of resistance. We are watching for potential rejections from here. If we are able to sustain through this region, it is very likely we move back into these moving averages closer to 5.7. Other than that, we are potentially facing a point of rejection now on the daily. This rally is more or less likely to be over on the short term now, moving into CPI. So what we can see here on the S&P 500, guys, we are still going to be watching this overall downtrend on the RSI. We still want to see that downtrend break to confirm we have got a positive momentum shift, and we are going to be continuing upwards. Until then, although we have seen a great rally, we haven't taken out these prior highs over here. And as we already know, for us to be bullish, we need to turn 5,756 into a level of support, meaning we need to break through here. At the moment, we are still printing lower highs on the short term. So we do run the risk of a correction or a rejection from this point. And, you know, there's not much more to say other than the fact that this whole rally over here was really triggered by that 90-day pause. And that was not something you can really foresee, unfortunately. There's random news events that pop up, especially during the middle of night in Australia time, sometimes can influence the market. We have to understand that news events are really what drives the market. And as we know already, the market is reactive and emotional to anything that has any short-term influences on the strength of the economy and possibility for interest rate cuts in a later period. So watching very closely, the S&P 500 has bounced very well, however. Looking at our upcoming economic news, we do have CPI data coming in pretty soon. This is going to be in around about 12 hours by the time you're watching this video, maybe around 11 hours. We can see over here, CPI month-on-month and year-on-year inflation data, previous consensus and forecasts. We are watching very closely over here. We would like to see inflation falling. This is going to be a good potential sign for interest rate reductions in the future. If we do see inflation come on par or potentially higher than previous, this will be a bad sign. So we are looking for at least a result of what we saw previously or underneath our consensus and forecast. Let's go ahead, guys, and jump into Bitcoin. So before we get into the broader analysis today, and we got a heap to talk about, go ahead and support the content and support the channel. Sign up to BitGet, BitUnix, or BingX with the links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll support me making the content, and most importantly, you'll be trading on an exchange I trust, and you'll support yourself in the process. We'll play a quick ad and we'll jump on in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's get straight back into the video. We are starting on the short-term price action, and then we're going to be discussing the implications this short-term price action will have on the macro. So first and foremost, guys, let's zoom into a very small time frame and discuss this rally. As we can see over here, guys, we had that tariff news come out, and Bitcoin went absolutely parabolic here on the hourly, pushing all the way up to around 73,000. On the short term already, guys, if we zoom into a 15-minute and really zoom in, we can start to see a little bit of exhaustion is developing. We'll come back to the higher time frames in a second, with some bearish divergences right over here on the 15-minute, simply meaning the price action is continuing toward the upside as the RSI is creating these higher lows, indicating a discrepancy between the momentum, okay, and the direction of price action. This is generally representative of exhaustion, okay, meaning the buyers are beginning to exhaust and the sellers are starting to step in, which generally does precede correction. So we do generally see mean reversion from these points back to the 50 EMA, potentially to the 200 moving average, if we start to see this occur and if it does develop over a higher time frame. We do have a uptrend on the RSI over here on the 15-minute. This is taken from our prior two low points. So low point number 1 sitting around 74, and low point number 2, which is sitting around 75,000. Again, extending that across, we can see it does cut through this break of structure level if we draw a horizontal line and into this VRPV gap. So if we do see a break of this RSI trend line, we expect the exhaustion that has been developing up in this region as a consequence of, again, a massive rally now exhausting and that buying pressure fading away, we could see the price action drop as low as around 78,000 into this break of structure, at least the 50 EMA and potentially the 200 moving average. So we do need to see the RSI break down to be more confident on that correction. But at the moment, this is going to be an assumed local high at 83.5k, and we are looking for a downward move provided we remain underneath this level. So especially with CPI coming up around the corner, anything can really happen depending on the CPI data release. It's going to massively sway the direction of the market. But if we just have to ignore CPI is not coming and we're looking at the charts and what they're telling us, that is simply what we are watching for now. Again, break above these highs, expect continuations. If we remain below these highs, expect corrections to 50 to 200 and to 78,000. And then the CPI data on top of that is going to exacerbate any of these directional moves based on the news event we get. So that is going to be the short term over here on the 15 minute. Let's now zoom out slightly to a higher time frame. Let's go to a 4-hour and an hour chart. As we can see here on the hourly chart, we are pushing up into these prior levels of resistance, these prior highs. If we go ahead and draw out some horizontal boxes over here, we've got a horizontal level of resistance sitting around 84,000 over here, and we do have a smaller local high sitting around 83, which we have currently rejected from, again marked out by our POC and our liquidity levels, which are these red horizontal boxes. So worst case scenario for Bitcoin, we fail to break through these levels of liquidity, rejecting immediately and pushing back downwards. As we could see with a CPI rally, we may push up into this upper region where we've had prior to rejections before we then correct. That would be worst case scenario. If we're looking for downward continuations, and that would be a good entry for shorts if it does occur. And again, if that does occur during CPI, depending on the result of CPI, we could see this volatility push a little higher or result in that strong rejection toward the downside. So we're watching that region here for a potential higher time frame rejection if we do retest it. To put simply, rejection zone number 1 is here, rejection zone number 2 is here. Our targets represented by the 50 and 200 moving averages and the prior break of structure level as discussed on the 15 minute. Until then, it is likely to see a bit of volatility and chop moving into CPI. So let's now talk about the 4-hourly and the higher timeframes. As we know, guys, if we're looking at the higher timeframe chart on the 4-hour here, we haven't really seen too much of a confident rally here to be confident that this move is going to sustain. If we're looking at this price action, we've got our highs over here, we've got our lower highs over here, lower highs over here, if we can even call that a lower high. So we haven't really broken through any structural levels of significance. All we've really done over here is rally back up into these prior high points. What we really need to see for the buyers to step back in is, again, the same thing we've been looking for quite some time now. And that is going to be a break above this $89,000 region, which is our primary level of resistance, not only here on the, we're looking at about a month period, it's about a 1 month range over here underneath 89,000. But if we go to the higher time frame as well on the daily chart, this $89,000 region, again, is that level of daily resistance. It was once a level of major support. It sustained a support for around about 2 and a bit months, and now it has been around resistance for about a 1 month period, if not 3 months over here and 1 month over here. So again, prior support becomes future resistance. For Bitcoin to turn bullish and expect continuations, we need to break through this region. Every single rally until then should be taken with a grain of salt, and we should be watching for rejections and pullbacks. Let's now talk about the implications this bounce has had now on the weekly and higher time frame charts. So before we say that, we do want to point out that there is 4 days remaining until the weekly candle close. And a lot can happen in 4 days. And the next 4 days are going to be very, very important. And we'll discuss why in a second. Let's take a look at what needs to happen first and foremost for the buyers to step back in and for us to be confident that we've got a proper reversal developing here. Number 1, we need to see the weekly RSI break. That has been something we've been watching for a long time. If we look at prior historical moves with similar consolidations on the RSI, where we've had either horizontal consolidations or downward consolidations over the course of the last 2 years, above the 44.62 level, we can see a downward consolidation on the RSI, a downward trend on the RSI, a downtrend on the RSI, And what we noticed is when we broke through these levels, over here for instance, over here for instance, and potentially in the future, we saw expansionary multi-month uptrends. So that is a potential. We're not crossing that off. That is something that could occur, but for that to occur, we need to break that weekly RSI. We need to close above the weekly RSI. So to do that, for us to close above the weekly RSI, it is possible we may not need to break above 89,000. Again, as time goes along, the price point of which we need to break for the RSI to break is going to decrease as the RSI is in a downtrend over here. So we may only need to break above 85,000, maybe 86,000 for that weekly RSI to break. That is going to be a leading indicator for a continuation. So if we break the RSI, we are then watching for a breakout of, again, 89,000, and then also a breakout of this weekly downtrend. We need all three of those things, the 89K, the RSI, and the downtrend to confirm a macro continuation upwards. If we are trying to confirm a continuation into 89,000, we need a break of the weekly downtrend and the RSI, only those two things. So we need to see that for Bitcoin to turn bullish. Until then, we do still run the risk of steeper corrections, but, and we'll say it very strongly as we said in our prior video, we have reached a potential area of support here. And for us to see this stronger and much larger correction, potentially around 55,000, we need to have a weekly close underneath the Gaussian channel, upper band, and the 50 EMA. This is what we said in our prior video, and we'll stand by this. These two levels are critical levels of support. We have seen in prior cycles how the Gaussian channel upper band has held as support. We've also seen it held as support during this cycle. We can also see the 50 EMA, how it has held as support around the same point as the Gaussian channel upper band. So we need to break below the Gaussian channel upper band and the 50 EMA on the weekly. We need a weekly candle close below those levels in 4 days' times to confirm we are going to see a steeper correction. Now, a reason I say that will confirm we'll see a steeper correction is because historically, what we have seen upon the break of the upper band of the Gaussian channel on the weekly is we generally see directional continuations through the lower band. And our next point of high time frame support, if we see that, is going to be our sell side liquidity here at 55,000. So that is going to be worst case scenario, and we need to break below these two levels to validate that move, okay? That is what we are looking for if the weekly candle closes bearish this week. Again, with a bunch of economic news coming up, it is going to be around 50-50. We're going to have to see how it develops as it develops. Moving over to the 3-day chart. The 3-day chart, guys, as we can see, we did drop below the Gaussian channel 3-day level. As we talked about, a loss of the upper band results in the price action pushing below the 3-day, and we can see the 3-day midline is now pushing into that $89,000 region. Once again, going ahead and confirming how strong 89,000 is going to be as a level of resistance and significance on the higher time frame. If we bring up the Ichimoku cloud, we have actually broke back above the lower band of the Ichimoku cloud. This is a pretty decent sign for now, but again, it is not really enough to confirm anything. We need to see the price action push higher. And again, if we go to a weekly chart over here, I think we move back to a weekly chart, we can see, guys, the if we get rid of the Ichimoku cloud again and bring up that 50 EMA, the 50 EMA has held as a point of pretty strong support during this entire rally. So losing that 50 EMA, losing that weekly uptrend, weekly upper level of the Gaussian channel will be very likely to trigger a higher time frame downtrend. So those are the things we are watching out for, guys. The short-term price action, although it has been really good, right? We've seen a really good rally toward the upside. It isn't showing signs that it is enough yet to really confirm that the higher time frame charts have shifted. All we've seen so far is a news-based rally, and if that news-based rally cannot be supported and held up, it is likely we're just going to see the price action drop back to that pre-news price, back and see that mean reversion back to these levels. And that is going to be worst case scenario, because if we do this, that is just going to print, yet again, another lower high resistance of which Bitcoin is going to test in a future period to break above. So I think overall, I think a lot of people are getting exceptionally bullish again on these short-term rallies. I think it is always best being aware that the reason, you have to look at the reason why these rallies have occurred and potentially extrapolate how that could sustain in a future period. You also have to look at, you know, the upcoming CPI data and be aware that that is going to play a massive role in the price action. So immediately you have a high risk trading environment today where the price action is likely to be very volatile and likely to experience a lot of liquidity grabs in potentially either direction, as we have already seen toward the upside. So until we get this higher time frame confirmation, I guess the way you could be now is cautiously optimistic. Optimistic because we are now retesting the 50. We are holding above the 50. We have shown a decent amount of support on the Gaussian channel upper band, but cautious because we have not confirmed that we are going to continue higher yet. And while we have not confirmed we're going higher, the risk of downward continuations is possible, as the trend is your friend until it ends, and we expect the trend to continue in the direction of which the trend is moving until we get confirmation of which it has broken. So thank you for tuning in, guys. Have a fantastic day. In tomorrow's video, we'll go over the altcoin market and we'll go over the total market cap as well. We'll see you then. Bye.